Why do you think Cathie Wood called out Berkshire Hathaway CEO Charlie Munger regarding Tesla stock? Well, Wood has always been known as a Tesla bull, while Munger is known to be a believer in Tesla's rival BYD. Charlie Munger and many on Wall Street do not understand that passing along the lower cost associated with technologically enabled innovation, in Tesla's case batteries and drivetrains, will cause a boom in unit demand, discrediting the Keynesian-Fed's Phillips curve model. Wood tweeted on February 18th. Wood said this in response to Charlie Munger's CNBC interview a few days prior. In the interview, Charlie Munger shared the reason why he prefers an investment in BYD over Tesla. According to the billionaire investor, Tesla reduced its prices in China twice in the last year, while BYD increased its prices. BYD is so ahead of Tesla in China, it's almost ridiculous. If you count all the manufacturing space BYD has in China to make cars, it would amount to a big percentage of all the land in Manhattan Island, said Munger. To this, he received backlash from ARK Invest CEO Cathie Wood, Rich Dad Poor Dad author Robert Kiyosaki, and former Overstock CEO Patrick Byrne. That said, Cathie Wood, through a tweet, retorted that Charlie Munger, along with many others on Wall Street, does not understand that the lower cost associated with technologically enabled innovation, in Tesla's case batteries and drivetrains, will cause a boom in unit demand, discrediting the Keynesian-Fed's Phillips curve model. Wood believes that Tesla's innovations will drive down its costs, enabling it to slash prices and supercharge demand without sacrificing its profit margins. Wood also expects tech advances to alleviate U.S. inflation, paving the way for the Federal Reserve to reduce interest rates and fuel economic growth. Wood also shared her belief that over time, Tesla's battery cost will become more competitive as the company continues to invest in its manufacturing capabilities. Well, Cathie Wood has been a Tesla bull for many years. She compares Tesla's disruption of the auto industry to Amazon's revolutionization of retail or Netflix's effects on the entertainment industry. In fact, Wood is so bullish on Tesla that the EV company is the top holding of her ARK Innovation ETF, ARKK. One of the reasons why Cathie Wood and her firm ARK Invest are so bullish on Tesla is because of the company's battery technology. She believes that Elon Musk's company has the most advanced battery technology in the industry and sees this as a key advantage over its competitors. Wood also thinks that Tesla's drivetrains are a critical component of the company's future. She noted that they are the most efficient and powerful on the market and give Tesla vehicles a performance and range advantage. Besides Wood, the author of Rich Dad Poor Dad, Robert Kiyosaki, also expressed disagreement with Munger's words. In a recent interview with Stansberry Research, Kiyosaki said that Charlie Munger is an old man like him. Kiyosaki believes that Munger belongs to an older generation of Americans who like and trust the mainstream financial system, whereas younger people are more eager to disrupt the status quo. Former CEO of Overstock Patrick Byrne also shared his thoughts. Munger is the most overrated mind in America. Byrne said in a tweet, if Buffett had not picked him up, Munger would have been the wealthiest good lawyer in LA. He continued, the one great idea he found and hammered all the way to heaven is explaining how everyone else's good ideas were obvious, curmudgeonly. Between Cathie Wood and Charlie Munger, who got it right? Well, Cathie Wood, who is a strong proponent of innovation, believes that many market participants can't see the potential of Tesla's technology for optimizing future product costs. In theory, this should result in an increased demand for the company's EVs. Meanwhile, Munger believes that BYD's advantage in China will keep it ahead of its peers, including Tesla. However, it is well worth noting that although BYD sells more cars than Tesla today, it makes 8 times less profit per vehicle. On average, Tesla makes $9,761 per vehicle, and BYD makes $1,190. That said, Tesla has been lowering prices and offering incentives to attract more customers, while BYD is just beginning to enter several giant new markets and has very ambitious plans for the next few quarters. Overall, both companies are ahead of the competition in the EV industry and continue to grow and multiply their profits. Furthermore, both stocks trade at nearly identical price-to-earnings PE ratios. Tesla trades at 57 times PE, while BYD trades at 58 times. Click on Part 2 to know more about Cathie Wood's thoughts.